Hey guys, okay, this is the market update. Today is November 4th, and I priced out several different scenarios for you, and I'll kind of let you know exactly what those look like before I give you the numbers, the interest rates, and the total payment. So on all of these, well, let me just first go into where the 10-year treasury is right now. We opened this morning at 4.934. It just keeps going up. It did drop down today, down to about 4.733. Right now it's sitting at 4.81, and it's right around 11:30 Pacific Standard Time as of right now. So that's what it looks like. So in these scenarios, I'm going to do this weekly for you. I would like to do it live, but I'm recording this so that I can put it on a couple of different platforms, but it is live, not scripted. I just priced out all these scenarios, and I'm going to go over with you one by one with what it's looking like depending on down payment, FICO score, that kind of stuff. And of course, some of them on the location. So let me first just come out and say, one market update I just heard this morning is that next year, 2024, purchases are going to go up by 10%. Couple of reasons why that is because we do know, and we do feel a lot of the experts are saying that the interest rates are going to drop, and it could only drop a half a point or a point, but that's going to be huge because right now we're sitting around 8% with all the pricings that I told you. What I give you today, we're right about 8%. So when it drops down to 6, 6.5, or even a 7, the purchasings are going to go up about 10% within 2024. So if you're a real estate agent, you've done well this year, you're going to do better next year because the interest rates are going to drop. More people are going to want to sell and, of course, rebuy because of the drop in interest rates, and there's going to be more inventory. So that's first off. So here we go. Let's price this out. So what I did is in my last video that I don't know if you saw. So the loan limits have now been raised throughout California. I'd say loan limits in a lot of different places. Now it's been raised up to $750,000. So we can now do loans up to $750,000 without it be considered a jumbo in some counties. Okay, now in my county, in Orange County, they unfortunately have not risen the max loan amount for Orange County or any other counties, but it did go up from $726,300 to now up to $750,000. So we can do a conforming loan at that. And we could do that as about 2 weeks ago. So I priced out several different scenarios for you. So I have a couple of different screens I'm going to go off of and tell you exactly where they are. Now, for majority of these scenarios, this is what it's going to look like. We're looking at a 700 FICO, okay? They are all priced out as single family residents, okay? And then in regards to the payment, the down payment stuff, I will go through those each individual. But for the first several, it's 700 FICO, and they're all single family residents. We're not doing condos or anything like that. So we're looking at a loan amount, or let's just say start with this purchase price at $790,000. So we're doing 5% down with the max loan amount now for these scenarios at $750,000. Okay, we're doing 5% down for a total purchase price of the $790. Again, FICO's at 700, and it is a single family. So, and I'm going to be giving you the par rate, okay, the best rate that came out. But then if there's another one that's really close and similar, I'm going to tell you what that one is also. Whether it comes out as FHA or conventional, I didn't price out VA. Might price out a little bit better, but my pricing scenario is different. So I'm not doing any VA pricings right now. I'm just doing FHA and conventional, and whichever one's coming out better in regards to the mortgage payment. Okay, cheaper mortgage payment is what we're looking at. Interest rate is going to go up and down. So that's not as important as the total mortgage payment, PITI. We're talking principal, interest, taxes, and insurance. And I did it for every single one of them based on the purchase price, okay? Estimated homeowners insurance annually is about $1,500. So that's what I put in there for the total payment. And that's what we're going to need for them to qualify for the loan anyway. So we're looking at 5% down, $750,000 loan amount, $790 purchase price, 5%. The par rate, that means they're not buying the rate down. This is just par. They're going to get this rate. They can get a better interest rate, obviously, but they will be charged for that. Every interest rate I'm giving you today is par, which means there's no cost to the borrower. Okay, we're looking at 7.11. Okay, that's max loan amount. Total payment is $6,517. $6,517 is the total payment. Our par rate at 5% down at a max loan amount I did Placer County, 7.11. Again, total payment, $6,500. So that is the par rate and the best interest rate available for, and that comes out, I'm sorry, that's FHA. It's coming out as FHA. That's coming out as 7.11. Now it's adding mortgage insurance premium of $13,000 on top of that. So going down to conventional, the payment is $66.51. The interest rate's 7.845. However, you're not getting added an additional $13,000 to the loan amount. Okay, so it depends on where the borrower qualifies. Now, if they needed that extra, it looks like we're about $140, $130 more. Almost on, yeah, about $130 more on the conventional, but they're not adding $13,000. So if they qualify for that, that's probably the rate that we would want to go. And of course, they definitely have the option to buy it down. Now, this is interesting. So going from a 7.845, no points, they can get a 7.625, drop the payment down to where I just quoted you, a couple of dollars higher than the FHA, and it's only costing them $1,500. 0.2 in points at 7.625. We're looking at $6,537 payment. That would definitely be the route to go because they're not adding $13,000 on top of their mortgage. So that is max loan amount for California, $750,000. Now, $750,000. Let's switch gears. $750,000 now. Max loan amount, but putting 20% down. So this is a total purchase price of $937,500. I know you real estate agents are like foaming at the mouth right now. We're doing, again, 700 FICO, okay, single family residence, and I did Riverside County on this one. We got the taxes in there and the estimated homeowners insurance about $1,500 a year. So this is coming out, and conventional obviously is pricing out the best at 8.369. That's 20% down with a 700 FICO, total payment of just under $2 under $6,800. So $6,800, not buying it right down. It's par 8.369. That's for a 700 FICO. Obviously, if the FICO score is better, the interest rates are going to be a little bit better in the pricing, and also the payment is going to drop, but not significantly. It's not a huge drop. So those are the first two max loan amounts in California. Now I'm going to switch gears to do my county, Orange County, max loan amount of $1,089,300 for a total purchase price of $1,146,000. Okay, so we're doing 5% down. Obviously, conventional is going to price out the best. We're doing, again, 700 FICO, single family in Orange County. Okay, and I have the property taxes in there also. So this one is coming out to par rate, and it's actually charging them 0.8 in points because it's only 5% down max loan amount. Their total payment is $10,200. 8.625 is the lowest rate that they can possibly get with a total payment of $10,200. And they're already charging 0.8 in points. They only have a choice. So if they wanted to go this route, this is the rate that they would get. And again, this is par, not adding anything. But it's charging $8,800 for that, and by buying the rate down for another $2,000 or $3,000, it's only dropping a mortgage payment $100. Not really that significant. Don't really recommend it. Wait till the rates drop and refinance. So that's 5% down. Max loan amount in Orange County, $1,089,300 with a 700 FICO. Only 5%. Now we're going to go same thing. Max loan amount for Orange County, $1,089,300. 20% down. Okay, for a total purchase price of $1,361,700. 700 FICO, again, doing Orange County, and it's pricing out now at 7.822 is par for a total payment of $9,401. $9,401. So it went from, we got 8.625, charging them 0.8 in points, which is $8,800 to get that at $10,200 to 7.822. Again, 700 FICO for a $9,400 a month payment. And that's total PITI. Now we're going to switch gears a little bit. No, I'm sorry. We're still doing 700 FICO. Now this is going to be the average loan amount for all of California. I typed in California for last year, average loan for purchases was 612,000 and change. So I just dropped it down to about 600,000. So we're doing 600,000 loan amount now. Okay. And again, we're going to do 5% down. That's a total purchase price of 631,579. Okay. 700 FICO again. And we're doing Los Angeles County, LA County, and single family residence. All right. So FHA did price out better. Okay. In regards to the mortgage payment, at par at 7.09 with a 5129 payment, $5,129 payment, adding 10,005 to the loan amount. Okay, now dropping down to conventional, we're at 6.8. So it's 0.8 basis points worse. And the total payment is $5,347. So you see the payment difference. So now doing 5% down with a $600,000 purchase price, depending on their debt to income, it might make more sense to go FHA on this one because the payment is now $5,130, let's just call it, compared to $5,347. Now, again, obviously you're not adding in that extra 10,000 on top of the loan amount. Now, what you might want to do here is the same thing that happened in the other scenario over here. If we put 0.2 points, we can get a 7.625, drop it down to 52.54. Okay. So we're going to drop it almost 100. Yeah, just under $100. And it's only going to charge them $1,300, $100 less a month. It's 52.54, and we're not adding that 10,500 onto the loan amount. So that's a pretty good scenario. And I'll look for those once we price them out and see where we're at. Now, we're going to adjust the FICO score now. We're doing minimum FICO of a 620. For dropping the loan amount, average loan, we're dropping the loan amount now down to 450,000 for a purchase price of 500. So we're doing 10% down, 500 purchase price, 10% at 620 FICO. Okay. And this one, we're going to switch it to a condo. Okay. I'm not adding in the HOAs because I don't know what they are. Okay. But I did add in the property taxes. And still estimating a homeowner's insurance at 1,500. It's probably less than that being a condo. But anyway, so here we go. Pricing this out. So obviously they have the mortgage insurance on there, and conventional is actually coming out ahead at 7.856. That's par for a total payment of 4,198, not including the homeowner's insurance. I'm sorry, the HOA dues. Okay, not including that. So I'll have to factor that in. But again, it did it again. So to drop it from 7.856 to 7.7 is 0.4 in points. But going to 7.6, it's 0.2 in points. So it actually makes sense to go down and buy the rate down. It's only $1,500. I'm going to drop the payment $70 for 4,127 total payment at the 7.625. Now, again, this is at 10% down, 450,000 loan amount at a 620 FICO. Now we're going to go really challenging on the FICO. So we're going to drop it down to 580. Again, we're doing a max loan amount, or the purchase price now at 415,000 for only 3.5% down. So obviously we're going FHA here because we're doing a 580 FICO for a loan amount of 400,000. Okay. 580 FICO. I got the taxes in there, also 3.5% down. So FHA is coming out at 8.2 for a total payment of $37.89. So that's your scenarios. So if across the board, we're looking at right around 8.2, and that's a 580 FICO. Okay. On a 700 FICO, 7.625. We got 7.625, 7.82, 8.6. That's for the max loan amount in Orange County. That one's a monster. And then your other ones, we're looking at 8.3 as par. And then even Home One is not even pricing out. It's actually, I mean, the requirements are easier, so we might go that route, but the payment's a little bit more. So none of those priced out in there. I clicked on single first-time home buyers on all these, and even those first-time home buyer programs weren't pricing out better in regards to the payment. Okay, we're looking at debt to income here. But one of the best ones that came out was a 7.1, and that was a FHA, but it came up as fixed and jumbo, which I don't believe it's not a jumbo. But it's adding on at 13,000. That was the best interest rate, but then 7.625 was only a couple of dollars more, and it wasn't adding $13,000 to the total loan amount. So that's your pricing scenarios based on where it is right now. So we're looking at anywhere between 7.5% and 8%. Now I guarantee you, I'm cheaper than anyone else you're talking to. And again, these are par rates. They weren't buying the rate down on this. Okay. And again, I will be able to beat anybody when it comes to the interest rate because I want to build that relationship with you, closing it fast. And in fact, for the investors out there, if you have any investors, just 2 weeks ago, I was able to close a bank statement loan in 7 days. I was clear to close in 7 days of submitting that file. And I was basically waiting on both the buyer and the seller to come up with a date of when they wanted to close and sign papers. Because I was clear to close in 7 days. I was been able to help 2 self-employed borrowers who did not qualify at all due to their taxes, going a different route, and are not able to qualify. And on that loan that I just was able to get clear to close in 7 days, that was on a second home. Okay, so a second home, vacation home. I think we locked them in at 8.137, I think is what it was for a second home. Not too shabby. 7 days clear to close. So look forward to helping you guys. If you have any questions, please reach out to me. Look forward to helping you in the future. I'll be doing this every week. So send me your questions. Let me know what you want me to price out, and I'll price it out for you. I'll give you real-time quotes on what we're looking at.